Good morning, everyone. Tuesday, July 28th. Thank you for watching these daily financial news. Remember, we're targeting 150 thumbs up for these videos Monday through Friday. And when we do that, because I have faith in you, we are going to once again do another hour together of just questions and answers. Saturday morning, 8 a.m. Pacific. So do me a favor, hit that thumbs up, but also start leaving your questions. So I have some stuff to prepare for. I prepare Friday evening for our Saturday discussions because I want to make sure I do the right things for you. So in the end, today, Tuesday, a couple of things kind of jump out. Before the market opened, we had two earnings reports that are interesting to look at. First off, we'll go to 3M. 3M is kind of a big conglomerate, does lots of things. They missed the top and bottom line, and their stock is suffering this morning. The write-up I saw, their CFO talked about Q3, they called it early print. That's executive talk for July actuals have been a little better than Q2. So they're trying to spin the story that Q3 is better than Q2. I would certainly hope so. Q2 is going to go down as likely the worst GDP print for the U.S. ever. So to say that Q3 is a little better than Q2 it's not really saying much, Mr. CFO. But the earnings announcement that caught my attention, both for just its size, but also what it says to the consumer or about the consumer, is McDonald's. McDonald's missed. Revenue fell 30%. 3-0. Now, truth be told, a lot of that is breakfast. McDonald's does have or has had a huge breakfast business. So that is quite large. That one caught me, and it really doesn't sound like there's much hope, at least in the near term. A lot of their franchisees are surviving, frankly, by simplifying the menu, right? They are controlling cost as opposed to really growing revenue. So to me, that sounds like they're limiting the menu. They're controlling food waste, obviously. They're controlling headcount, and things are not good. But again, it's McDonald's is, at some respects is America, right? I mean, I don't, the McDonald's French fry, the McDonald's breakfast, right? It's what we do, right? Pull up to the drive-through, go in on the weekends, whatever it is. And if their revenue is down 30%, what does that mean about the consumer, right? Because I have a hard time thinking that McDonald's is the only one suffering this. So where I go with that is after hours today, Starbucks earnings come out. And while Starbucks does have a different business, I think it's fair to say that breakfast is important to them as well. So I would even argue that Starbucks business is more breakfast oriented than McDonald's. I could be wrong. But again, that's one guy's opinion who's gone to both, frankly. I think consumer behavior is changing. Not going out nearly as much, especially for breakfast, clearly. Making coffee at home, clearly, as I am every morning. Although it is Starbucks beans, so, they're getting some revenue from me. But yeah, so I thought I actually read a couple articles about the McDonald's earnings announcement, because I think McDonald's is the consumer, and I think it's something we should watch. And I don't think it's getting enough press yet, but it's early, so we'll see what happens. Las Vegas is rough, man. I think it was yesterday. It might have been Sunday. I think it was Sunday. Brian Lebo, who I've had on this channel a couple of times, who's a broker in Vegas for 30 years, or a real estate agent for 30 years, has a great channel. Check it out, the Lebo Group, I think. We were just talking about the casinos finally giving it up and doing layoffs. We're going to see a lot more pain in Vegas. I think Vegas Vegas is that environment that I've been trying to shake. Is we've successfully delayed pain. You know, we took Advil or something. Um, it's Vegas is going to start showing some pain. So that is interesting, and I think it's coming. Right, all the casinos seem to be laying off. All the entertainment, it's just bad. And just to cap that off, just today I heard that CES, I think it's the largest conference yearly at Vegas, Consumer Electronics Show, I think it stands for, is going to go virtual this year. First off, I don't have any idea um, how you do Consumer Electronics Show virtual. That's not my. Vegas is. I feel for Vegas. So um, we'll see. So it's tough, and I think it's going to get worse before it gets better. I think that is. I think that's something we're going to see in a lot of kind of entertainment cities. Going to get worse before it gets better. After the bell, I've already talked about Starbucks, but we got some others. AMD. Uh, AMD seems to be eating Intel's lunch. Intel had a rough. I mean, Intel had an announcement. I think it still sticks with me. See if I can remember. What did they say? It said had no roadmap to. Um, I don't know, no roadmap to profitability or something like that. Clearly, I don't remember it correctly, but basically, Intel got tarred and feather for their lack of advancement, and their lead technologist just left yesterday. I assume that was a leave or we'll let you go conversation. But we also have Visa. Again, another look at the consumer, where Amex reports, and it's more quote unquote the rich or the wealthy. Visa is more the everyman. So it will be interesting to look at what's going on at Visa and eBay. eBay, again, shopping at home, all those things. I think all of these, Starbucks, AMD, Visa, eBay, will be very telling for what is going on both in Q2 and the second half. Goldman Sachs, of course, comes out and raises gold and silver. I would say late to the party. I don't know. I mean, I seem to remember this in the early 2000s. The analysts were always late or lazy. What I mean by late is something goes up and then they raise it. And lazy, they seem to be picking on like the same 5 stocks today. I think yesterday there were 4 stock raises for Amazon. And it was like a race to see who could be the top. Oh, I'm going to go to 3,500. No, I'll go to 3,600. And there's like no meat in their why they raise. It's just like a momentum play. Pretty bad. I digested the Case-Shiller index this morning, and I think it's actually starting to tell us something that no one else is talking about. So let me share this with you, kind of the data at the headline, which all of you could see, but I think it's telling you the story of the rush to the suburbs. So first off, the Case-Shiller index has 2 indexes. They call it the 20 city and the 10 city. And as you would expect, the 10 city has the 10 biggest metros. And then there's the 20 city, which includes the 10 and then is slightly bigger. And then there's a national number. So take a look at this. The national number came in for May. So these are May numbers. They're a little behind. May numbers, housing was up 4.5%. The 20 city was up 3.7%. And then the 10 city was up 3.1%. That's interesting, right? The nation was up the biggest number, the 20 city was up the next biggest, and then the 10 was up the least. Well, if you actually tear apart and look at the indexes of the 20 and the 10, you could see that they're made up of the big cities. And if you and I are right and we see a rush out of the big cities into the suburbs are not covered in general by these indexes. So the Case-Shiller index may become less relevant, or maybe it is just going to tell us how bad the exit from the cities are by the gap between the national number and the 10 cities. So right now, again, national is up 4.5 and the 10 cities up 3.1. So I'd call that a significant gap. And if I'm right, this gap is going to get larger, not smaller. which again, in my mind, makes the Case-Shiller index less valuable. But again, it's been around long enough. I think you could take something from it regardless. Just because it was there, Phoenix posted the largest increase. It was up 9%. And then Seattle was up 6.8%, both of those year on year. And again, just so everybody knows, when you leave comments that, I don't know, or chats or whatever these little things are, it's tough for me to read them. And I don't know where they're saved or if they're saved. If you want me to answer a question on Saturday, you must leave it in the comments. The comments are saved. It allows me to go back and look at them. If you're leaving a comment here, because we're doing it live together, I appreciate them. I appreciate all the welcomes and the thumbs up and all that stuff. But I can't read the questions and they're not saved, so I won't remember them for Saturday. So just FYI. So again, that's what I think about the Case-Shiller. Again, up the most, Phoenix, 9%. Makes sense. We had a broker from Phoenix on. Things are going nuts there. Seattle up 6.8. Millennial Mike, who is a follower of this, is saying don't buy in Seattle. Prices are nuts. So again, I think we're seeing that firsthand. I did see air travel. They're now anticipating air travel not getting back to 2019 levels until 2024. 2024. So at some point you've got to stop throwing good money after bad. We need less airlines. We just do. I don't know what else to say. It's a strategic business. We can't have zero. Totally get it. But we don't need all of the ones we have now. What are they going to do? Borrow from the federal government until their balance sheet is upside down, right? All of these zero loans and all of that. Yeah, if you can't get back air travel to 2024, you need less planes, less people. And frankly, airline travel needs to be more expensive. I mean, let's be fair. The Fed meeting starts today. They're having a 2-day meeting. It'll be interesting to see what kind of message they send. It will be anything from, hey, we're going to continue doing what we're doing. Rates will stay low for a long time. To, hey, we're announcing this or that. Part of me thinks the Fed is not particularly happy with what's going on in our elected offices. And they may announce some more, I don't know, bond buying, more buying at the discount window, buying ETFs. I don't know what they're going to do, but I don't think they're particularly happy. Again, I don't share that saying it's a good thing. I don't share that even thinking I would do that. I share that simply to say they're being pretty aggressive and I continue them to be more aggressive. Yeah. Yeah, and then again, let's talk about Thursday. Thursday is going to be a monster day for lots of different reasons. First off, we're going to see if the new unemployment claims trends up again. We are going to get our first cut at GDP, how bad it is. If the estimate was 35% negative, do you take the over or the under? Be curious to see what you think there. It's going to be bad. And then we have the 4 big tech companies reporting because Facebook moved to Thursday. We have Apple, Facebook, Alphabet/Google, and Amazon. So it is going to be a monster day. And then just because I have to talk about it, the stimulus discussions are going on. I will say, again, with no political motive intended, I do think the GOP, which came out with their presentation yesterday, which now starts the negotiation, I think they made a strategic mistake. It is obviously an election year, and it seems like they are being cheap at the wrong time. If, Q1 and Q2, we hid pain because we were able to keep the economy from cratering to nothing, right? Because people had money in their pocket, most of that from the unemployment. So they're talking about cutting that significantly. Again, I think that's a strategic mistake. And they're talking about sending out $1,200 again. That $1,200 does not go into the economy. And because people are changing. A lot of the people that watch this channel, and maybe that's a myopic view, but if you're employed, Most of you took that $1,200 and saved it. Congratulations, that's what you should do. But that doesn't help our economy. I don't understand. I don't understand. If you're employed like you were back in January or February, you are doing okay. You don't need help. Well, you might need help, but you don't need the most help. Take that $1,200 idea, flush it, keep the money, and go pay the unemployment benefits to get us through the end of the year. Yes, I know that some people are making more money sitting on the couch. I know that. But what happens if the money dries up and now you have people really talking about not paying rent, can't pay rent, deciding what bills to pay? We could be there. And I shared an experience, I think it was Sunday, about a particular bad recession that I lived through as a kid. It could come around to a lot of the US if the GOP is cheap. Now again, remember, this is negotiation, and they started their fence post here, and the others are here, and hopefully we'll meet in the middle. But it is an election year, and people will remember this stuff, I think. So I really don't like the idea of the $1,200 check. I freely admit I didn't get one, but I don't think that's a wise use of capital. That's a lot of money you could use to try to help the others. And shoot, take some of that money and send it to food banks or something, because what I'm seeing in food banks is getting pretty scary, and that is certainly where my donation will go this year or this quarter, to the food banks. So that's what I got for you today. Have a wonderful day. Take care of yourself. Bye.